Welcome back, traders. Today I'm starting this session with a capital of $888. This number is not just capital, but also a symbol of balance, consistency, and luck that we're bringing into today's trading strategy. As always, our focus is on the compounding strategy, which grows the account step by step by reinvesting every profit into the next trade. This way, even a small capital can turn into something much bigger over time. Remember, trading is not about how fast we make profits, but about maintaining discipline, money management, and patience. So pay close attention to every step, because from just $888, I'll show you how compounding can lead us to much bigger targets. To apply this strategy, the very first step is to set up the indicators on your chart. 7-period moving average in green. This serves as your short-term trend line, capturing the most immediate price action. 20-period moving average in yellow. This reflects the medium-term trend direction, showing the market flow over recent candles. 60-period moving average in red. This represents the long-term trend and also acts as a dynamic support and resistance zone. MACD with default settings. This functions as your momentum tool and confirmation of the overall trend. By combining these 4 indicators, you gain a complete view of the market: short-term trend, medium-term flow, long-term structure, and momentum confirmation. When all of these align, it gives you much higher accuracy in your trades and more confidence in every decision you make. The way to apply this strategy is actually very simple, but don't underestimate it. The key is discipline and consistency. We focus on 2 major confirmations: the moving average crossovers and the MACD signals as our entry triggers. When a bullish crossover occurs on the moving averages, it's not just another signal. It means buyers are stepping in with strength, upward momentum is forming, and the probability for price to continue rising is much higher. That's when we take a buy position. On the other hand, when a bearish crossover forms, it tells us that sellers are in control. Price shows weakness, the trend shifts to the downside, and that becomes the ideal moment to enter a sell. But remember, we don't rely on crossovers alone. We must always pay attention to the red line, the 60-period moving average, which acts as a dynamic support and resistance. Every time price touches this line, it often reacts, bouncing or rejecting. And that reaction gives us additional confirmation for a precise entry. By combining crossover signals with the bounce reaction from the red line, this strategy becomes stronger, more accurate, and most importantly, repeatable with consistency. As your mentor, I want you to understand, trading is not about chasing every move in the market. It's about waiting for the best confluence of signals, then executing with discipline. That's how a simple method turns into a powerful compounding strategy. Take a look at the MACD indicator. The main line is about to touch the signal line from below, while the histogram is narrowing. This means we're waiting for a potential bullish crossover, which will be a strong signal to enter a buy. Once the crossover confirms, buyers are expected to take control and bullish momentum will form. So, we're getting ready to enter a buy on MACD as soon as the crossover happens. Let's watch closely. Okay, profit. All right, traders, let's open the market again. Watch the MACD indicator closely. We now have a bullish crossover where the main line cuts above the signal line from below. Every time this happens, it signals buyers are stepping in with fresh momentum. Also notice the histogram turning green. The longer and taller the green bars grow, the stronger the buying pressure pushing the price upward. So the combination of a line crossover and a strengthening green histogram is a valid signal to enter a buy. I'm taking a buy on this MACD crossover. Let's watch the result together. Okay, profit. Again. Alright traders, let's open the market again. Alright traders, look at the MACD. The main line has just crossed above the signal line from below, a valid bullish crossover. Each time this happens, buyers step in and upward pressure usually increases. Extra confirmation is seen in the histogram turning green and expanding upward. The taller the green bars grow, the stronger the buying pressure behind the move. This combination of crossover and histogram gives solid confidence for the buy entry. Let's watch the outcome together. Yes, exactly. Price is moving upward as the histogram strengthens. We're ready to open the market again and look for the next setup. All right, traders, I'm now opening a buy position. The reason is clear. On the MACD indicator, we see a bullish crossover. The main line has just cut above the signal line from below, and that's a strong indication that the market is shifting into bullish momentum. In addition to the crossover, notice how the histogram has turned green. Not only has it changed color, but the bars are also expanding upward. This tells us that buying pressure is increasing and the probability of price moving higher is strong. So, the combination of a bullish MACD crossover and an expanding green histogram gives me confidence to enter a buy at this level. We're not guessing here. We're acting on a clear technical confirmation. Let's watch the outcome together. Exactly, the candles are pushing upward just as we expected, and after this, we'll be ready to open the market again for the next opportunity. Alright traders, I'm opening a sell position right now. The reason is that price has reached the red line we marked as the key resistance area. This level has been tested multiple times before and consistently held the price from moving higher. That means it's a very strong ceiling for the market. As price touches the red line again and shows rejection, it signals buyers are losing strength and sellers are starting to take control. This is the perfect condition to go short. So I'm taking a sell at the red line. Let's see how the price reacts. Okay, profit. We're ready to open the market again and look for the next setup. Alright traders, I'm opening a sell position. The reason is that on the MACD indicator, we just had a bearish crossover. The main line has cut below the signal line, and this is a clear sign that bearish momentum is forming, and sellers are taking control of the market. Extra confirmation is visible on the histogram turning red and extending downward, which indicates increasing selling pressure. Situations like this often mark the beginning of a deeper downward move. So, I'm taking a sell on the MACD crossover. Let's watch the result together. Yes, exactly. Price is moving down after the crossover and we made a profit. Let's open the market again for the next opportunity. Alright traders, I'm opening a sell position. The reason is clear. On the MACD indicator, we've just had a bearish crossover. The main line cut below the signal line from above, signaling that bearish momentum is starting to form. Also notice the histogram turning red and extending downward, showing that selling pressure is strengthening and sellers are taking control of the market. So I'm taking a sell on this MACD crossover. Let's see the outcome together. Yes, exactly. Price is moving downward, as expected. We're ready to open the market again for the next opportunity. All right, traders. I'm now seeing a clear signal to open a sell position. Take a look. MACD is showing the main line about to cross below the signal line, and at the same time, the moving averages are getting closer, preparing for a bearish crossover. The combination of these two conditions is an early sign that the market is preparing to shift into bearish momentum. Buyers are losing strength, while sellers are ready to take control. Once the crossovers confirm, the probability of a downward move becomes even stronger. So I'm taking a sell based on the upcoming crossovers on MACD and MA. Let's see the outcome. Okay, profit, guys. All right, traders, I think that's enough for today's session. I've reached my target, and the account balance has now grown to $127,458. This is the real result of staying consistent with the compounding strategy we've been applying from the start. Remember, trading is not just about numbers. It's about discipline, money management, and patience. With the same strategy, even a small account can grow into something this big. For those of you who want to learn more in depth and truly understand how to apply this strategy step by step, you're welcome to join me in VIP Compounding. That's where I share everything in detail. See you in the next session, and stay profitable.